It's Jay with Jay Money Secrets. I'm a wealth advocate, stock and options trader. I'm also a licensed insurance agent, and I'm an investor. Let's invest. Let's talk about this thing called credit and why you need to have good credit. Credit has literally woven its way into almost every aspect in life. A lot of things that we actually pay, like car insurance, homeowners insurance, and even life insurance. Part of the premiums are calculated based on your credit score, but what your credit profile looks like. And that's what I want to talk with you guys about. What is credit and data points you need on your credit report for you to have good credit. Credit is a 3-digit number. It's like a label that's put on you before these lending institutions ever meet you or even talk to you, right? So you want to make sure that you have good credit. Now, I've heard that it's better to have a good name than silver and gold. And credit is our name, especially when it comes to lending. And why is that so important? Because wealthy people, we leverage our way to wealth and not just save our way to wealth. And one of the best ways to get leverage, the low-hanging fruit, is by starting with your personal credit. So we got to make sure that's good. So let's talk about what that looks like. So we look at our personal credit. We're looking at about 5 key data points we need to make sure that's on point at all times. One of which, the largest, about 35%, is going to be this thing called payment history. We want to make sure that you're paying things on time. And I get it, things come up. That's why we need to have emergency savings. And there's different amounts that people recommend that you have inside your savings account. But I want to make sure that you have access to capital and or credit to be able to fund any kind of emergency savings that you have. I would recommend anywhere from $1,000 to $5,000. Everybody's financial situation is different. We can talk about that one-on-one. Sometimes we're not able to make payments on time. You want to communicate. Don't go silent. Communicate with your creditors. Let them know what's going on before that 30 or 45-day window when they potentially may report that to the credit bureaus as a late payment. Let them know that things are going on and they can work with you so you don't get that late payment. That's 35% of your credit score. We can't afford to have late payments. And then worst case scenario, if we do have late payments, there's forgiveness letters, or you can call the creditors and ask them, then whether it be a first time occurrence or second, if they could actually waive that late payment for you, right? Number 2, we look at a thing called utilization rate. Now, utilization rate is specifically the amount of credit used divided by the total amount of credit that you have available. So we can do that per card or accumulation of all the cards that you do have. An example, let's say you got a credit card of $10,000. I spend $1,000 on this $10,000 credit card out of the $10,000, which means my utilization rate is now 10%. That is a utilization rate to have, which is ideally 10% or less. That's optimal. That gets you the best credit score. 30% is decent or less, but once you start getting over that, that can actually affect your score in a negative manner and drop your score. But what does the bank look at? This individual has access to all of this, and they don't need it. They're not maximizing, they're not maxing out their total limits, and they're using it responsibly. That's what they want to see. And utilization rates are normally about 30% of what your credit score is. Then we look at this thing called account types. Now, they want to see a mixture of accounts, one of which is revolving. That's when I use credit, I pay it back, and I have that same money to use again, i.e. a credit card or a line of credit. But when we look at something called installments, that's something like an auto loan, that's like a mortgage, or even student loans, to where I get a loan and I have to pay this back and I can't use or access that money again. I'm just paying that loan down until it eventually gets to zero. So they want to see a combination of the two. That's anywhere from about 10 to 15% of their credit. Then we look at this thing called inquiry. So inquiries is what we're looking at. Now, when it comes to inquiries, every time that you apply for credit, you can get hit with what we call a hard inquiry. There's also something called a soft inquiry. Now, with the soft inquiry, it doesn't affect your credit score, but it gives the creditor an opportunity to look at your credit without affecting the score. A hard inquiry is going to actually come up on your credit report, and it's going to show. And normally they fall off about every 2 years, but be advised, these inquiries can drop your credit score about 2 to 5 points every time. But what does the lending institutions look at? This individual is aggressively applying for a whole bunch of credit at one time. Is their financial situation changing? Is something happening? Is there over leveraging? So they start to question why so many inquiries. So the ideal amount of inquiries to have on your credit report is about 2 to 3. Now keep in mind, inquiries can be removed within 24 hours as well. Because if information is inaccurate, fraudulent, or unverifiable, it must be deleted from your credit report. And I actually have an ebook about credit, right? So if you are a person that likes to repair and do your own credit yourself, this ebook, which is in my link below, the ultimate guide to credit repair, is a book that's going to teach you about what credit, what it is, and how to make it work for you. You're going to know how to improve your credit, how to remove inquiries from your credit within 24 hours, and it's actually going to teach you like things like high utilization rate and how you can use credit as a form of leverage to build wealth. When it comes to inquiries, we want to move on to the next aspect of what your credit score needs to look like with another data point, and that's the length of the credit history, and a lot of people overlook this. Now, when it comes to the length of your credit history, ideally we want to see 5 years or longer. What does that show? Longevity. Lending institutions like to see that longevity. Because think about it, an individual that has no credit can be potentially get one credit card, use it one time, under 10% utilization rate, and boom, can instantly have a 750 credit score, but they have no other history. They don't have any data saying that they can continuously do that. When we look at that, they normally take all the accounts that you have and divide it by the amount of months that you have and compute that to years or months, depending on how long it is. And they want to say at least 5 years or longer. So this is why it's not ideal to close credit cards. If you close credit cards, that history that you have is now removed and it's gone. And that can affect your credit score and drop it. There's different ways to lengthen your credit history. If you just have a credit length, let's say 1 or 2 years, you can add what we call an authorized user. And as an authorized user, you're literally added to somebody else's card and get the length of that history of that card, but you also get the utilization rate. Make sure if you're going to be added on as an authorized user for an individual, that individual is not planning on using that card, at least to a point where it's going over 10 or 30% of the utilization rate. Number 2, you want to make sure that they're paying that card on time. And number 3, you want to make sure it has the length of the history that you need. And a lot of times people go out and go get this thing called authorized user to become, to get on as an authorized user. But do you need it for utilization, or do you need it for length of credit history, or do you need it for both? So know your situation before you actually go out here and pay or find someone to get on as an authorized user. And note, a tip, you want to always add an authorized user as after you've made sure that everything is paid on time. After your utilization rate is where it needs to be. After the inquiries are removed and or ideal, add the authorized user. Once you have these particular data points on point, based off the information I just gave you, your credit score should at least be 700, 740. What does that do? That normally puts you in a position where you can get the best terms and potentially the best rates on any loan products that you get. Get our credit at a point where it's ideal. So 1, we can pay less on the premiums on these car insurance, life insurance, and even homeowners insurance. 2, get access to credit to do what? To buy assets, to create this thing called wealth, so you and your family can live life on your own terms. And that's financial independence. That's what I want to teach you guys. As mentioned before, I have an ebook that talks about credit, and it goes into depth into credit. This will be the last ebook that you would need to have on credit. It's going to educate you about what credit is, how credit works, and how to make it work for you. But now you can be in a position to repair your credit. Hey, this ebook may even inspire you to start your own credit repair business, but it's a good start. The link in my bio below. And I want you guys to do me a favor, like and subscribe. More information about financial literacy is going to keep coming out. But I want to hear from you. What is it that you need to know and want to hear about financial literacy, where I can help you on your wealth journey? Until then, let's talk about credit. Any questions? Drop them in the comments below. And until then, let's invest.